In today's video, I will discuss one very important topic, whether you are resident of Canada for tax purpose or non-resident, and which income you need to report in your Canadian tax return. Hi, I'm Jamal Abbasi from Source Accounting Professional Corporation, your Canadian tax partner. So in Canada, taxation system is based on whether you are resident of Canada or non-resident. It is not based on citizenship status. There are two main categories in Canadian taxation system is, as I said, a resident of Canada and non-resident. If you are resident of Canada, you report your worldwide income and pay tax on that income. If you are non-resident of Canada, you only report income generated inside Canada. For example, I am a resident of Canada and I have various income inside Canada. I will report all those income in my Canadian tax return. But I also have an investment income from another country, say Germany. I will have to report that income as well in my Canadian tax return because I'm a resident of Canada and I need to report worldwide income in my Canadian tax return. Naturally, when I report this income from abroad, I will have to pay tax on that thing, additional tax. To offset this additional tax, government give me foreign tax credit for the taxes I have paid in foreign country. If, for example, I am non-resident of Canada and I'm living in some other country, let's say again Germany, and I have become non-resident and I have some investment in Canada, so then I will only report that investment income generated inside Canada. I will not report any income that is generated outside Canada, in Germany in this case. Now that you know your Canadian tax reporting is based on your residential status, let's see how CRA consider you as a resident or non-resident and what factor they consider to determine your status. There are basically two categories of factors that CRA consider, which are breakdown in primary residential ties and secondary residential ties. So primary ties include your home in Canada, your spouse living in Canada, or dependent in Canada. If these primary ties are not strong enough, CRA might look on secondary ties, secondary residential ties, which may include your economic connection with CRA, your social club membership, driving license, health insurance, and various other factors. So CRA and court will look all factors to decide whether you are resident of Canada or no. If you maintain this residential tie, even though you are living outside Canada, CRA for tax purpose will consider you a resident of Canada. There is another category of residents which is called factual resident. These are people who are temporarily living outside Canada. For example, you are outside Canada for education, health, vacation, or business purpose, and you intend to come back to Canada shortly. Lastly, there is category of deemed resident. These are people who are living outside Canada and don't have any residential ties with Canada but still are considered resident of Canada for tax purpose. An example include federal government employees who are posted outside Canada or employees of Canadian Armed Forces. I hope this video was helpful in assessing your situation. If you need more help or have any questions, please call to Source Accounting team and we will be happy to assist you.